Well, g'day there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. It is going to be a relatively busy week for us. We are in the midst of earnings. Tomorrow, it begins. We've got Caterpillar reporting, followed by Boeing Airlines. This is scheduled to take place on Wednesday, but the biggest day for us really this week when it comes to our top 12 individual trade list is Thursday. We've got a number of big companies reporting. We've got Amazon, we have Google as well. We also have, if I scroll through this list, it looks like COP2 and a couple of others as well. Baidu, another one included. So again, when it comes to initial trades or immediate trades, we need to navigate through earnings, and this is really lining quite well as I pointed out over the weekend, because essentially what we're looking for right now on the equity markets is to see, a secondary push to the downside, a secondary push that will ultimately fail. A secondary push that is going to, unfortunately, sucker in a lot of nervous longs to actually capitulate and begin closing out any existing, potentially long positions that they may have even built up towards or throughout the entirety of September. But also, on the contrary, it's going to sucker in a bunch of new short positions if, in fact, we temporarily break below 24,750. What is most likely going to happen is that ultimately we are going to push on back down to roughly 25,000 on the Dow Jones Industrial Average, and we are going to begin setting up candlesticks that take the formation of hammers at support. And essentially what that means is these lower wicks that should set up, just like they did in the midsection of August, is going to be used as the pivot, the turning point upon which that next push to the upside continues off from. Now, the reason we're saying this is because, again, if we go out, on the weekly chart, at the moment, we still have a confluence of support on the Dow Jones Industrial Average. We are holding up not only above horizontal support, which has acted as resistance for really the majority of 2018 during this section over here, this period of time, but also we have this rising trend line that, as at the current juncture, as at the close on Monday, it is still holding firm. You can see actually that the sell-off that took place 3 weeks ago, we came on and more or less tagged it to the penny. So this is telling me immediately that there are a lot of active market participants, probably also a lot of institutions as well, who are still looking to buy off from this bounce here, but only, of course, if and when we see that exhaustion wave of selling take us back down to this critical area. It may even break 25,000 temporarily, but again, you should be looking at this a little bit more constructively, i.e. looking to actually buy the dip when it is presentable. At the moment, there's not enough foundation for us to actually really begin taking any of those trades. If you take a look also at these oscillating indicators, although they are beginning to turn up, we still need to see the MACD present another secondary push, which will fail. So keep an eye on the MACD moving forward. Again, it looks as though we are starting to see a little bit of tightening between the fast and the slow line of the MACD itself. But again, when they are pointed to the downward direction, we still see continued lag in the equity markets, and we see some residual sort of selling linger around indefinitely until we get the right candlesticks that are suggesting ultimately a move back on up. Now, before I go into the S&P, let me just show you the NASDAQ as well. Again, very similar to what I just pointed out on the industrial average. We are more or less closing right on this very important support area. But what is more important is, technically speaking, this trend that has been in effect since 2016. This is when we began to diverge away from the longer term macro backdrop, the big long-term trend of the market since 2009. And essentially, if we extend this out into the future, if I go back into the daily time frame, this red line on my screen, this extension coming up through here, is essentially the trend, the accelerated fan line that is pushing off from, right, that macro bullish trend, which essentially diverged in the year 2016, as I just showed you. So again, you have to think about this on the NASDAQ as a rising support area coming up through here, which is telling us that, to an extent, we have limited downside that may actually overshoot the low that we priced in. This was on the 11th of October. But again, you want to be looking for reversal candlesticks around this critical area of support, with those oscillators beginning to firm up after a secondary push to the downside, which is then going to, of course, lead the way for the foundation of a true legitimate move off from support. So that's essentially what I'm looking for on the markets. Again, we go into great detail over the weekend. And if you go into that pro class, by the way, the past 3 weeks have been a really good sort of spread when it comes to neutrality, leaning into the peak up here, all right, being 50-50 on the market, but also having a relative bias essentially for any downside action, which we took advantage of. But then, of course, last week where we were looking for more or less a round trip, okay, the market moving backwards and forth, but essentially closing unchanged, and that's exactly what happened. So A really good example of 3 weeks worth of work still housed up online in that pro class that I would encourage a lot of people to move through. But as I said at the beginning of this video, we must navigate earnings this week. And that's really going to get us through, or at least through to the close on Friday. But it's going to leave us with a blank canvas to work with as we move into next week's session or week's worth of trade. Now, the following week, we have 2 more additional stocks that are reporting. Or it might actually be 3. It's either 2 or 3. Pardon me, I'll need to clear that up. But the majority of that is going to be finished as at the close on Friday this week, which is really good news for everyone involved. Now, the final market I wanted to speak about was that of the S&P 500. It's a little bit different to the industrial average and also the NASDAQ. The reason for that is because we don't really have a sort of decelerating or accelerating fan line that we're working with when we look at the Dow and the NASDAQ, which leads me to believe that the S&P 500's got a little bit further to fall. And instead of it traditionally coming back down into this rising trend line, if you look back for the majority of 2018, if I just draw, and I'm going to use my mouse to the best of my ability, so my apologies if it's not 100% correct, but what I'm trying to do is just map out essentially a rectangular area where there is a lot of support for this market, or at least underpinning the market. So what I've done, anyways, I've drawn a green rectangle in that same area as to when and if we pull on back down. And this is essentially coming in at about, really 2,725 down to 2,675. So we have about a 50-point spread on the S&P 500. And again, very similar to the previous markets. If we see the sell-off push below this low, a lot of weak shorts are going to begin rolling out of long positions. And it's also going to usher in a lot of greedy shorts to actually begin shorting the market, probably at the most incorrect time possible. So don't be one of those people. Again, remain patient and disciplined. Look for the reversal candlesticks when we get down to this area, if in fact we do. And then the play is not going to be to short the market because, of course, public sentiment is going to be very bearish on the markets. They're going to be calling for potentially even a retest of the 2018 calendar lows. That really wouldn't surprise me. But what you should be looking for are clues as to the market actually stabilizing at a slightly higher low, okay? And then ultimately starting to push off and continue on, of course, working on the slope of hope, or at least, just building up, building the foundations and just grinding higher, all right? Slow and steady. So that's really how this market update is going to essentially end today. A lot of these stocks, unfortunately, we are unable to trade at this time because of earnings. You never want to hold positions into earnings, and as such, you need to close them out. You should have been out of Caterpillar today, should be out of Boeing Airlines. Anyway, those targets were hit essentially, or at least one of them was, and the majority of our top, or at least the remaining shares on Thursday, essentially we hit those targets 2 weeks ago now with that waterfall sell-off. So it's not really going to affect many people whatsoever in that analysis class, but don't hold positions through earnings. Okay, it's not what we do, and I don't encourage anyone to do that whatsoever. All right, so if you have any questions, email me, success@pivotpoint-trading.com. Enjoy your Monday evening, everybody. I'll be back with you tomorrow for another market recap. Farewell.